Welcome back to Das Won't Hunt. I'm Xiao Pierre Ruth for Information Week, and in this episode, we are taking a look at open banking and actually the concept of what it's going to take to secure open banking as the U.S. starts to kind of march forward. Not in a very cohesive way, but is making efforts to move forward in this space. Open banking, as folks know, is kind of a structure framework for allowing customers to have their information be available to, from financial institutions to third parties for a number of different reasons, different ways to do that. But there's also the question of doing it securely. Now, open banking is something that has taken off a bit more, actually more coherently in Europe, and there are other various countries that are exploring it in different ways, still working on their frameworks. And recently, the Consumer Financial Protection Bureau here in the U.S., finalized some rules for financial institutions to kind of proceed forward with that. But before we start to dive into that, I'm glad to have a group of stakeholders and experts to kind of, once again, people are smarter than me in the room to share their knowledge and input on this topic. And welcoming to this episode, we have Ben Shorten, Accenture's finance, risk, and compliance lead for banking and capital markets in North America. Adam Preis, director of product and solution marketing with Ping Identity. And Fernando Luege, CTO for Refresh Consulting. All of you, thank you so much for making yourself available for the show today.
No, thanks for having us.
Right. Okay. So let's start off with Fernando. If you could speak to this, what have been some of the hurdles that needed to be cleared for open banking to be realized in the United States?
Yeah, it's a great question. So, I mean, let's start just trying to contextualize the open banking approach that the U.S. has been taking, in particular with personal information or consumer information protection policies enforced by the Consumer Financial Protection Bureau, and if I need to summarize those policies, I would say that data access and sharing is probably the most important aspect that they're trying to enforce and to create a framework around it. Then you have obviously the privacy protection around that information, the timeline, the compliance timeline that is actually from an implementation perspective fairly tight for institutions. Then enhanced security measures, and finally the control given to the consumer for over that information. And that's been kind of the primary focus of the regulators in the US. But interestingly enough, they've let a big open space from my perspective in terms of the business opportunities and the kind of perspective that financial institutions of all sizes can take in order to bring more business to their institutions and also to provide lateral services. With this in particular, I'm referring of how can you not only see the data sharing side of open banking, but as well the transactional side of open banking, as big institutions or mid-sized institutions allow smaller institutions like fintechs or community banks to provide extended services through them. And getting back to your question, I think one of the biggest challenges that we're facing is that even if we get to a clear definition of the different things to be controlled and policies to be kind of enforced, there's not going to be enough time for the majority of institutions to implement, given the timeline. And this comes back to how they are perceiving these as an internal risk, as opening services and opening information to potentially enhance competitors, but as well as how they are getting new responsibilities that the entire risk departments are not actually comfortable taking yet. So I would say that if the US is able to come together with a standardized framework, sooner rather than later, and that also specifies steps and milestones that can be delivered not in one big block by the end of 26, if I recall correctly. But before that will be probably a good thing to start with.
Gotcha. Great. Thank you very much for your input on that. Ben, how have financial institutions responded to the concept of open banking? Has it been with a sense of urgency to enact it, or with some caution about moving forward?
Yeah, I think a key point here for finance institutions, I think the drivers of open banking, I think, are well understood around needing to increase competition and be responsive to customer expectations as it relates to access to their data and the ability to share that data as they would like to. I would say that with that, banks are recognizing there's an inflection point that's been presented to them a little bit through this regulation as an opportunity to further differentiate their relationship with their customers in terms of some of the transparency they're providing, and the availability of their data, and also the ability to create more personalized experiences. Fernando mentioned, for example, data privacy regulation. I think it's a really interesting parallel somewhat. If you think about some of the state level privacy regulation in the US in recent times, we've seen organizations be able to think about that regulation a little differently, to think about it not necessarily simply as a regulation, but also as a leading indicator of expectations of their customers around the experience of banking going forward. And I think, if I give one example, a client we've been working at, actually the response to data privacy regulation was led by the head of customer experience. That organization really recognized that, the need around data privacy, the expectation around data privacy could be an opportunity to be really customer centric and further kind of elevate that relationship. And I think that's coming back to the point around open banking. I think you've got an opportunity for banks to think differently about that. And I think that's how we're seeing some, respond in kind.
Awesome. Appreciate your thoughts on that. Adam, how has open banking been received and handled in other countries? Can you think of examples or places where it has worked very well? Has there been any kind of instances where it has stumbled a bit?
It's a challenging question there, because it depends on what criteria you're applying. It's a two-sided coin, really. I mean, if you look at markets like the UK and the EU, where regulation has really driven open banking adoption, and you can say these have been successful open banking stories. If you look at the UK has currently got 11 million open banking users. The EU has 13 million open banking users. Then if you look at some more emerging open banking markets like Brazil, then we're talking about a completely different paradigm, different shift. There's also been great adoption in places like Australia, again, driven by regulation, the consumer data right. But actually, there's a flip side to that argument. So if you look at open banking adoption in the EU, you'd think, well, we've had about 7 years of the PSD2 landscape, and we've got 13 million open banking users. In the UK, we've got 11. There's something not quite right there. We'd expect the number to be much higher. And you look at the growth rate in Brazil. So there are certainly opportunities that open banking presents, and the market adoption has been really difficult. But actually, if you look at this from the perspective of financial service providers, certainly in the UK and in the EU, there's been a lot of cat dragging, so to speak, right? A lot of banks have to be dragged to be compliant with PSD2, to meet the API specifications, and it wasn't necessarily a kind of a cooperative process. So again, not clear, straight picture. The users, to Ben's point, the open banking users are deriving value from the services, and the progressive providers see that as an opportunity to create differentiation. But I wouldn't say necessarily that's a rule that all banks and all financial service players embrace fully.
Great. Awesome. Thank you. And thank each of you for individual thoughts on those questions. All right, so let's open it up to something for all of you. All right, so again, bringing this back to the recent rules finalization from the Consumer Financial Protection Bureau here in the U.S. So what are some thoughts on what will take beyond those rules for financial institutions to offer open banking securely, at least, from a U.S. perspective or even broader perspective? What are other steps, be it examples that you can draw from the EU or even on a technical side that might be really necessary to be part of the conversation and part of what institutions kind of work into how they approach this?
I'm happy to jump in. I mean, I'd say, ultimately, open banking allows access to banking data to other participants in the ecosystem. And so by definition, it's sort of widening that scope of how you can access financial services, but also putting a large chunk of sensitive data across that bigger ecosystem. And there's a risk of that, on its worst day, being stolen by bad actors. The key for banks is securing data and securing the APIs. API security, especially, I would say, has emerged as a priority in a world where hackers are targeting banks' APIs as a potential chink in that armor. And so, I think as banks think forward about this, ensuring API security is a key prerequisite here to table stakes, if you will. And there's three sort of security related KPIs that we sort of see organizations really kind of anchored to. There's sort of successful authentication of customers. There's successful authentication of technical service providers as well. And there's the number of sort of fraudulent transactions, like starting to kind of think about those types of metrics, really start to guide the security posture. And I think that's going to be a critical part of this going forward.
And, just Ben, to kind of pick up on your point there, and we talk about security, what's really interesting if we start looking at the CFPB 1033 fine detail, and there's close to 600 pages of this, right? A lot to process. They haven't specified what API standards they'll be using. They've clearly said we want to reduce screen scraping. And just for the benefit of the audience, screen scraping is sharing or extracting data, not through a secure method, but by using credentials, getting access to the account and scrape data out. Very insecure method of doing so. They have said in their regulation, or the Rule 133, that they hope to eliminate or reduce that. They haven't specified how. They have invited organizations to submit themselves to become standard bodies to specify what API specifications they'll be using. Now, just to kind of put that into context, in the UK, there is a specific organization, the open banking entity, that sets out API specifications. And these specifications are rolled out and updated on a monthly basis. This is not just a once in a blue moon kind of exercise. So for me, when we talk about security and when we talk about those key KPIs that you mentioned, Ben, the key thing there is to think, well, which body will be appointed? What kind of API specs are going to be expected to conform to? That's the kind of detail in the pudding, right?
And on my side, another key challenge that I see is that the regulation is getting kind of obsolete fairly quickly, and we haven't been able to really implement it yet. While there are other new concepts and technologies that will require new regulation on top in order to keep up. In an example will be, for example, how these personal data can be integrated or used on AI models, and who will own that information, and how that information will be controlled, and how we will be enforcing that the privacy rules are actually executed. So all the AI conversation get us to a new point where perhaps talking about principles that we want to keep instead of particular policies that we want to implement would be actually a good idea, creating this framework that you can build on top of.
Great. Thank you all for your input on that. All right, so I can picking up back of what Fernando was even speaking about. What is the balance, or what could be the balance of delivering new options via open banking, through the newer technology? And this something that I'm sure the financial institutions have to kind of weigh anytime there's a new shiny technology option to be brought to the fore. What's the balance about bringing that something to the fore, but then also keeping the data secure? Is there a threshold for security that should not be crossed, or in theory should never be crossed, for the sake of trying to achieve that kind of openness that this endeavor is striving for?
Yeah, so if you let me start with this, security can be seen and analyzed from different layers. I would say from a technical perspective, in terms of security protocols, encryption, and all that, any security breach should be inexcusable. There is enough technology to keep everything and everybody's safe.
To listen to the entire conversation, look for the Das One Hunt podcast on Spreaker, Spotify, Amazon Music, and other popular podcast platforms.